Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, April 6, 2023. It is exactly 1 p.m. Eastern Time as I'm starting the video, and I just wanted to remind or point out that the markets will be closed tomorrow in observance of Good Friday here in the States. So we're going to have just a few hours left in the trading week here. I'll give you my thoughts and tell you the key levels to watch. And again, this will be a quick one. So being that it's Friday, the markets are still in a very precarious technical posture. We have not yet failed the breakout above 313.62. As pointed out this morning, that we gapped down today, went right to that level. And as expected, I put very good money on it that they came in and bought that dip. That's support, and that's where they should buy. And the $1,000,000 question is, will it hold? I'll give you my thoughts. I thought it would be a fleeting bounce, and I expect that we'll most likely fade this into the close. In fact, I think the top is in right now, so that's why I wanted to start the video. All right, so why is that that the top is likely in? We'll see. You have a top for the day I'm talking about. Remember, we already broke the uptrend line there on QQQ. We danced along, got the reaction I wanted yesterday to help validate it. Gap down today, but this was bigger support by far. You only had 1, 2, 3 reactions on the trend line, and you have this was a major, in my opinion, support, former resistance, now support level. Remember, we gapped up. If you turn all the lines off, you can see gapped up above it right there, and basically back tested today. So to see us just go down through there, especially being down, we were down what, over 1% at the open. The chances were very, very slim for that to happen. So right now, when you look at the lines, if I tighten it up a little, depending on how you look at it, we're roughly back testing the trend line. So breakdown, back test, and again, we'll see what happens. If not today, then nothing's going to change in my outlook. The market would have to do this today, and it's not going to do that. So, you know, whether we reverse here, head down to the close, I suspect, and this is just a micro call, you know how those are, you're bound to eat crow. If you make a lot of micro calls, you're going to eat crow every now and then. But I suspect we'll probably gap down over the weekend. I like these kind of setups because right now, again, there's you know, you're either a bull or bear at this point in time. Now you can be obviously on the sidelines, nothing wrong with that, and I'd highly encourage it for those that are somewhat risk averse or really don't have a good read on the market. Nothing wrong with sitting in cash and seeing who wins this battle. But you know, this is where the bulls should, and they stepped in and bought there, that pullback. So basically, you know, bigger picture, you have a breakout and a back test so far. Successful back test at that. But if they gap down, because you have a 3-day weekend, and so if the futures start moving down, you know, over the weekend, and then when the market resumes on Monday, you're going to have the potential to have a nice bear trap. Now, it could work the other way. I'm sorry, I should have said bull trap. Because right now, the ball is in the bull's court, so there's really no bear trap. We haven't had any solid. We had some early sell signals, as I pointed out, but you still need to see that 313.62 level go. And as I said before, just to reiterate, yesterday and in this morning's post, I have it at about 312 when I look at my daily chart here. And so you can see the lines right there is about 312. So that's really, to play it safe, you want to see a solid move back below there, and I think that will solidify the false failed breakout scenario. So work to be done. That hasn't happened yet. It's what I suspect. And you can see the PPO is now rolling over. We haven't yet confirmed that divergence on the daily chart. We do have it confirmed on the 60-minute, but we'll need a bearish PPO crossover. So if the markets are down good next week, that would give us a bearish PPO crossover there, thereby confirming that potential, what I call potential negative divergence on QQQ. So that's it, simple stuff. Maybe we can rally more today. Maybe we close, you know, rally into the close. And again, you're going to have 3 days of overnight risk, especially as a QQQ trader. Yeah, the futures will trade, you know, pick back up on Monday night. I'm sorry, Sunday evening. But it's going to go either way here. It's a critical technical juncture. It's, again, where the bulls should be stepping in and buying. You've got the uptrend line as well, and we'll see if they do or not. You know my thoughts. All right, NQ, Nasdaq 100. Remember, you had really more of a support resistance zone that runs from 13,074 down to about 12,973. Those are these two numbers here. And the 12,973 coincides with that level I just gave you on QQQ, which we backtested. The reason you have these spike highs here, which are higher than QQQ, is the futures trade around the clock, whereas QQQ is 9:30 to 4 p.m. You're looking at those trades. So these happened most likely in the Globex or outside the regular trading session. And, you know, to keep it simple, it's what it looks like to me, we still have a uptrend line, which was taken out yesterday, and we're currently back testing. That's why I think they, you know, it's an objective level. As I said earlier, really the next sell signal, if you will, and certainly the next objective short is going to be a break below today's lows, which was effectively a test of that 970-ish level right there. You could make a case also to short here on the back test of the uptrend line. The only thing about back tests is you can continue to back test at higher and higher levels. It's always a possibility, but there's also some minor resistance right there. Here, I'll show you what I'm talking about. You zoom in here, and you can see you've got a little bit. You have a reaction high here. I'm going to bring that line across. There it is. 1, 2, 3, 4, and then you broke down impulsively, and now you're back testing with the trend line. So just kind of really kind of zeroing in here on the short-term charts. And at the low recently we had divergence, especially on the, you can see it a little bit here on the 60. Nothing big, usually not the kind of divergence that gives you a trend change, a major trend change, but enough for a little intraday pop. Like I said, there was the reaction was likely this morning. That's what we got. There's that 10-minute chart. Actually, it was a 5-minute chart I gave you yesterday and the day before with the volume price histogram showing you the levels, and then that was the second one, and they took it down. You can see here, and they put in divergence right there on the 10-minute chart. So this is a shorter term time frame for active traders. You look for these divergent lows, go long, divergent high, go short, or on the breaks of support, like right there. And that's it. So you can see that we have rallied back to resistance as well. That's actually the same price resistance level I just showed you, but we're zoomed down to a 10-minute time frame here. And so again, you can see it right here coming up to resistance. So no guarantees that it'll hold, but it would provide an objective short or add-on if for those that want to either possibly game a fade trade into the last couple hours of the day today before we close, or hold on to it and take it home in the weekend, over the weekend. But again, it is anybody's game. I have to reiterate that as of now, this is nothing more than a breakout and a successful back test for the bulls. So we really need to see this level, today's lows, get taken out by a pretty good margin. So that's it. I think it'll happen, but until it does, you just can't go super aggressively short, in my opinion. It'd be kind of risky. There's SOXX, a semiconductor ETF, and you can see here I'm tweaking this trend line as I'm talking to you. I had it coming off this low, but what I'm going to do, and by that metric we had broken down yesterday, but I'm adjusting this as we do the video, because if I come back to that low, which is the October 12th low, it comes in, grabs this low, and then this one right here. So now you have one, instead of 3 reactions, you have 1, 2, 3, and now 4. So, again, to play it safe, like I always do, I'll adjust my lines as needed. Benefit of the doubt, you have a downtrend line there. There was a breakout, successful back test of that, and another back test. But more importantly, I would give a higher weighting to this. And it's the same thing. So either the markets rally from here, bulls remain in control, or we break down, again, pretty much below today's lows. That'll take out the trend line in SOXX. And you can see it's still down, even though the Qs have turned green. The semis, as expected, are lagging the broader market, and that's usually a tell, if you will. It's certainly not a bullish sign when the semiconductors are lagging and then big tech continues to rally. So that's that. Let's just keep this one short. No change in really anything else. The silver still at that key resistance level right there. with big divergence on the 60-minute chart right there. So likely pullback coming in silver and gold. I'll get to gold in 1 second. This is SI silver futures on a 6-month chart with 2-hour candles. There's your uptrend line. We had a little spike below, but again, this is, so you're at resistance with negative divergence, and this would say likely pullback coming at least to that 23,471 level. To quantify it for you, that would be about almost a 7% drop. And then gold, GC, let's just stick with these futures for now. Same time period, 6 months price history, 2-hour candlesticks, and you can see the same thing. Negative divergence, just like silver. Right there, there's your divergence line, divergent high, and potential uptrend line. I call it potential because there's only 1, 2 reactions, no third confirming reaction yet. Another minor little uptrend line there, but this is a key reaction high right there. So really, I think a break below that 1995-ish level right there should do the trick. Minimum target 1963, 1932, 1903, and maybe bring gold all the way back, possibly all the way back down here to 1828. We'll see. But you know, you have a divergent high just like you had back here. And as I always say, divergence in itself is not a sell signal, nor is overbought conditions. But if you start breaking support levels, and right here you had you know, 1, 2, couple reactions there, you broke out, and you're right on there right now. So I think gold loses that. And again, that's where I think gold and silver are going, at least in the near term. Going to have a correction. I don't have super strong convictions because the euro and the dollar charts are, they confirm somewhat, but I'm not as confident as I usually be. So I just have a small position in silver and GDX right now, and I'll go over that and then we'll wrap up because I'm sure there's questions on the GDX trade. So GDX is only going to go down if gold and silver go down, most likely. And there's the uptrend line right there. You can see we're still flirting there. RSI is in nosebleed territory, up at about 70, almost 75. PPO is stretched real high as well, and we're at the top of the resistance zone all the way back here. T3, we hit T1, T2, and T3 was always a zone. We hit the bottom of the zone there, and we're still right at the top as we were yesterday, as pointed out. So I think this trend line will break, and you know, minimum pullback target is going to be about minimum again 31.50 right there, give or take. And if so, that would be a drop in the minors of about 8.3. We'll call it 8%. Again, minimum target. I'll update it next week. We'll see how things pick up. But as of now, let me wrap it up here, and we'll see how we close. If there's anything big or anything that I missed or anything changes, I'll get another video out to you. Otherwise, this will probably be the last one of the week. This has been Randy Finney with Right Side of the Chart. Have a good weekend.